Hello guys, it's Max here from Daily Market Movements. Today it is the 17th of October 2021, which is a Sunday evening, which means we are on the cusp of a brand new trading week. On Friday I did a video concluding last week's market movements. I did that video and posted it early in the morning because, as I mentioned during that video, I have traveled to Dubai where I will be staying for the winter. So I just want to say apologies if you hear any mosques or any loud noise in the background. Where I'm staying at the moment, it's pretty downtown, and there's a lot of noise outside the apartment. But just before I start today's video, I just want to quickly cover the trading signal service. So if you would like to receive the same trades that I enter on a daily, weekly, monthly basis, then please do not hesitate to go and visit my website, dailymarketmovements.com, which will send you to this website here. You can go and have a look at the service that I offer in more depth. Just to make it clear that this is not financial advice, I just simply share the trades that I take on my personal trading account. And if you like the videos over on YouTube, well, then this is a more in-depth way that you can follow along with me. But moving back to the markets, so let's start with the gold markets. On Friday, we had the gold markets, which had a huge turnaround. Gold was looking extremely bullish as we went into the end of the week last week. We broke above this 23% fib level. We broke above the 50-day EMA, which is that red line on your screens. And of course, we then went and tested the 200-day EMA. Now, the 200-day EMA was a key area. I made it very clear that if we were able to get a daily close above the 200-day EMA, it would send us to the next level on the fib chart, which of course is that 38% level. So if we broke above that 200-day EMA, it would have very likely sent us towards 1830. It's not yet over for gold. We're now testing the 23% fib level, and actually this is quite a common move that you do see in the markets. Once you break above a fib level, you can go and retest it to see whether it holds as the new floor in the market. So what I'm really interested to see is this evening or going into tomorrow, which of course is the first official day of the trading week, whether we do get that bounce. This could just be a back test of the 50-day EMA and a 23% fib level, where we can confirm that as the floor here for the gold market, and we could see that bounce, which then sends us back to test that 200-day EMA. And as I mentioned before, if we break above that 200-day EMA, 1830 is pretty certain. And if we break above 1830, well, then that sends us up towards 1875. I know most of my viewers here who watch my videos are very bullish on gold. But also, I've covered the upside, but I also want to cover the downside. At the end of the day, we have broken below that 23% level. If we were to continue moving lower here for the gold markets, if we broke below this area here, which is around that 1750 area, well, that could open up the doors for a further downside movement here. If I just thicken that white line for you, there we go. We've seen a lot of noise around near that 1750 area, and if we broke below it, I think that first of all, we would go and test 1726. And if we broke below that, then I think 1700 and 1680, which are my longer term targets here for the gold markets, will be triggered. So that's just me covering a positive outcome for the gold markets if we were to break above the 200-day EMA and bounce off the 23% fib level. And on the flip side, I'm also covering what would happen if we did continue our downside movement. I think 1750 is the first target, and then we go down towards 1725. We break through the swing lows there where that white box indicates, and then I think we go down towards 1700. So it'll be very interesting to see what happens on Monday. I think it will really dictate as to where gold heads next throughout the week. So let's go over to the Nasdaq100. And Nasdaq100 had a fantastic Friday. On Thursday, we got that daily close above the 50-day EMA. I've been making it very clear that, a close above 50-day EMA is key for this market in order for it to return back towards its all-time highs up at 15,700. For those who are new to my channel, I cherry-picked the bottom back here on the 4th of October 2021 when we hit that uptrend, and I sent a buy signal to my signal team. We were buyers. We've already profited a significant amount on the Nasdaq100 over the past couple of weeks. So again, that is a reason why you should be in my signal team. But I also bought, of course, on the 4th of October down at 14,400. This is more of a long-term hold that I have for the Nasdaq100. I'm targeting up towards the all-time highs, which is a 9% rise from where I bought, and my stop loss was just below the 200-day EMA. So I was risking 4.35% to gain 8.92%. And as you can see, already this trade is going very well, and especially now that we've broken up the 50-day EMA, I think think that gives us, the right to move up towards those all-time highs, and I'm very certain we will, especially with earnings season, which has just started. We had some of the banks that started and kicked off the earnings season, and we saw some fantastic numbers. So I'm very confident that we will see the same with regards to some of these massive tech companies. Moving over to the S&P 500 again. We've seen that move above the 50-day EMA. We got that daily close above it on Thursday, and on Friday we have continued to rally towards the upside. Just like the Nasdaq100, I said for this market to return to its all-time highs, we would need to see a daily close above the 50-day EMA, and that is what we got. So very, very bullish indeed. I think that over the upcoming trading sessions, whether it be a week or within 2 weeks, we will be trading back at all-time highs here for the S&P 500. As I just mentioned over on the Nasdaq100 chart, it is now earnings season. So, I am anticipating some fantastic blowout numbers as the economy continues to rebound from the coronavirus. And, with that, I think companies do well. And when companies do well, then typically that reflects on their stock prices in the aftermath. So, and I'm not just talking 24 hours after that company reports, I'm talking more 3 to 6 months down the line. So good earnings equals good stock growth, typically speaking. Heading over to the crude oil markets, just want to start by saying a fantastic trade that we had here on the Signal team. So well done to all of my Signal teams and followers that followed me on the crude oil. I sent a buy signal down at $80 a barrel with a take profit up at 83. I was happy with the the $2.50 that we had gained, so I did decide to close this trade early as the RSI is telling us that we're overbought. I kind of went with the trend here. I did say that if you buy it up at 80, it is a risky trade, but I did have a type stop loss just below $80, and I went with the trend, and we have benefited off that. But that trade could have easily have gone the other way. If the bears come out and decided that we were overbought and that we wanted to adjust that, well, then I would have lost that trade just as easily. So very grateful that I did win that trade, and well done to everyone in my Signal team who managed to capitalize on that as well. Now I truly am just going to be sitting on the sidelines waiting for a correction here in the crude oil market. If we can get a move down towards that 50-day EMA, which is currently up at $74, currently down at, I should say, $74, and that would be a fantastic amount of value where I could really capitalize by opening up a crude oil long position and target up towards $80. So that's what I'm waiting here in the crude oil markets. It can be very difficult when you see a market just like this, which has just done nothing but go up and up and up over the past 6 to 9 months really. But unfortunately, the hard reality is that markets don't just go up and up. They do have pullbacks like this, and they do have bad days. And sometimes it just takes a bad day for the markets to throw a glass of cold water over their faces to make them realize that markets don't just go up and up. So that's what I'm kind of waiting here for in the crude oil markets. And it is a very painful wait, because I might just be sat here for the next month or 2 months or 3 months, and the crude oil markets may continue to rally towards the upside. But I'm not willing to put any significant money to work here at these high levels. That trade that I placed over on Thursday where I bought at $80 a barrel, it wasn't a large amount of money. It was a very small amount of money. And due to me being a disciplined trader, I will not invest a significant amount, because the risk outweighs the reward towards the upside. You've got much more downfall than you have upside, especially when the RSI is trading up at 75. So patience is the key here. It's one of the main rules of day trading or swing trading, whatever type of trader or investor that you are. Patience. But let's move over to the Euro-US dollar. Euro-US dollar being very stable throughout the week. Last week we did have that nice jump up on Wednesday. We closed out up at 1.16, pretty much give or take 10 points. And as I mentioned on Friday, what I really want to see here is a break above the 50-day EMA or a break above that 1.17 area. If we get that, I think we go straight towards the 200-day EMA. If we break above the 200-day EMA, then we are flying. I think then it will only be a matter of time until we hit that 1.195 area, and if we break above that, I think that's what sends us to go and complete this Fibonacci retracement table, which is all the way up at 1.23. That is my 12-month target for the Euro-US dollar. For those who've been watching my videos for some time, you'll know that I'm extremely bullish on the euro versus the US dollar due to the amount of printing of money that has occurred within the US over the past 12 months. So I'm going to wrap it up there, short and sweet. That is what I am hoping And looking for in the markets this week, just want to quickly take you back to my website. If you would like to copy my trades more specifically, then please do not hesitate. Go and head over to my website. I've left the website link in the description of this video. And I look forward to welcoming you all on our team. We had a significant amount of you join our team last week, so a massive thank you and welcome to Daily Market Movements. That is it. Enjoy the rest of your weekend, and I look forward to reporting back to you all on Wednesday.